When you think of banks, what comes to mind? A simple place to deposit your money? Well, think again. The truth is, banks are far more complex than you might imagine. So, how do they really operate? In today's video, we will explore the intricate workings of banks and reveal some surprising truths about their role in our economy. First glance, banks might seem like straightforward repositories for cash, but the reality is far more complex. Banks are dynamic financial intermediaries that play a crucial role in our economy. One of the cornerstones of modern banking is the fractional reserve system. In the US, banks are typically required to keep only 10% of deposits as reserves. This means if a bank has $1 million in deposits, it can lend out a staggering $900,000. Let's see how this impacts money creation. Surprisingly, banks have the power to create money. When they issue a loan, they credit the borrower's account rather than handing over cash from their vault. This practice expands the money supply significantly. Research by the Bank of England estimates that around 97% of money is created through bank loans. Fascinating, isn't it? While banks play a crucial role in economic growth, they also profit through various fees and interest rates. Let's break this down. Banks charge various fees for services, such as accounts maintenance and overdrafts. According to Bankrate, the average monthly maintenance fee for checking accounts can be as high as $15. This cost can really add up over time. Next, let's talk about interest rates. Banks lend money at higher rates than they offer on deposits. For instance, as of early 2023, the average savings account's interest rate is only 0.5%, while mortgage rates can be around 3 to 4%. This difference, the spread, constitutes a significant profits for banks. Banks don't just sit on their reserves, they actively invest in financial instruments. This brings us to the importance of risk management. Banks invest in government securities, corporate bonds, and other low-risk assets. According to SIFMA, bank holdings in the US Treasury securities reached about 2.6 trillion in 2022, showcasing the reliance on safe investments. To safeguard their assets, banks employ rigorous risk management strategies, including diversification and stress testing, ensuring they can withstand economic downturns. Banks have the power to impact the overall economy, not just through loans, but also by influencing monetary policy. Central banks like the Federal Reserve in the United States use commercial banks to implement monetary policy changes. For example, during the pandemic, the Fed drastically lowered interest rates to encourage borrowing. This resulted in a significant increase in money supply, which, as reported by the Federal Reserve, grew by more than 25% between March and December 2022. In summary, banks are far more than places to store your money. They fundamentally shape our financial system, drive economic growth, and influence monetary policy. Understanding these dynamics empowers you to make better financial decisions. If you found this video insightful, please give it a thumbs up, subscribe to the channel, and share your thoughts in the comments below. Until next time.